the importance of structure and the need to be able to identify structural points cannot be overemphasized as far as trading is concerned. Regardless of whatever method of analysis you are using, it is important you have adequate knowledge of structure and how to identify structural points. My name is Soji and you are welcome to Soji Forex. On this channel we share ideas on how you can trade the financial market. If it's your first time of coming across our video, do well to go to our previous video and do not forget to like, share this video and subscribe to this channel. Turn on the notification bell so you get notified whenever I publish our next video. In this video I want to share with you briefly how you can draw your trend line. What is the easiest way for you to draw your trend line? It is important to know that the market basically moves in three directions. It is either an uptrend, a downtrend, or a choppy or a ranging market, as the case may be. And each of these can be identified based on the pattern which they demonstrate. So in a downtrend, the market will be making a series of a lower high and a lower low, just as we are seeing here, a lower low, lower lows, lower lows, and you can see lower high, lower high, lower high. And structurally, the most important point of an uptrend is the lower high. And when we talk about the lower high, we are referring to this zone. Okay, the most important point of a downtrend is the lower high. We are referring to these zones here are the lower highs. So if I am to draw my trend line, I will need adequate knowledge of the structural point, which is the lower high. And why am I marking the lower high? It is because the most important structural point of a downtrend is the lower high, because when price break this lower high in the opposite direction, it gives us a change of trend, which means we are changing direction from a downtrend to an uptrend. And that is why the most important structural point of a downtrend is the lower high and not the lower low. So for you to be able to draw effective trend line, you need to identify two structural points. And the two structural points, you should be able to identify two lower low for a downtrend. So in this market scenario, this is our first lower low and this is our second lower low. So you need point A and point B. So this is point A and this is point B. So you will draw your trend line at this point and into the future. So here we have, you come up with your trend line and you can see how perfect this trend line is. So this is a simple way for you to draw a trend line, very easy. All you need to do, identify 2 points for a downtrend, a lower lows, okay, and you can tag each of these points as your point A and point B. Then you connect your trend line from point A to B, and then you can extend it into the future. You can see what happened afterwards. So how do you make entry? Your entry will now be when price move to the zone of this trend line, it gives you a confirmation entry. And one of the confirmation entry you can find is the candlestick pattern. that is formed around this zone. So if you look at this, you can see that we are having a candlestick pattern here. We are having an inverted hammer, which is a pin bar pattern. So you could have made an entry here and you would have made money. So you can count this consecutively and see how effective and productive this particular strategy is. Okay, and coming here, you can see here we have another beautiful candlestick pattern, and then another entry here. It plays out. You can see another one. So all you need to do is wait for price to pull back to the zone of your trend line, and then you make your entry. You can use your confluence of your Fibonacci for you to confirm more. And here we have two rejection. The first rejection, and then we have this inverted hammer rejection. So this is a live market scenario. So in this scenario, by the open of market today, we'll be making our sell entry, of course, because based on this pattern, we are meant to have a sell from this zone. So to somebody, this is actually a trading signal. So this is a sell. Based on this pattern, we'll be having a sell from that zone, and we should be having this sell. Price should be pushing to the downside, and above here will be our stop loss, and then we look forward to see how price will play out. So that is for a downtrend. And then here we have an uptrend. I would say that an uptrend is when price is making a series of a higher high and a higher low. And the most important structural point of an uptrend is the higher low. And when we are referring to a higher low, we are referring to these zones. This is our higher low, higher lows, higher lows, higher lows. So that is the most important structural point of a downtrend, is the higher lows. So all this zone is our higher lows. Okay, so all we need to do, we need point A and point B for us to be able to connect our trend line for an uptrend. So we'll pick our trend line and then connect it to our trend. So already we have spot. We still have point A here, and this is our trend line. Okay, so you need to be flexible with the trend line. You need to be very flexible with it. You don't need to be rigid when it comes to how the market changes. You keep making adjustments of your trend line, and you can see how this plays out beautifully. You can see price went pull back, and this trend line is treated as a zone. You don't just treat it as a line, but you treat it as a zone. And you can see it went price pull back. We'll look forward to a candlestick pattern here. You can see we have this bullish pin bar. You can see this one. So you have your entry and you are on your way to the upside. You make entries using your candlestick pattern. And if you don't know what candlestick pattern is all about, we prefer you watched our previous video. Here we have another one. You can see it down, and all we need to do, we pick this structural point and we are connecting our trend line. This is our point A, this is our point B, and when price comes here, it gives us an entry. Okay, so from the third touch is where we make our entry. Okay, make our entry on the third touch. This is touch 1, this is on touch 3 we have our entry. Okay, and if we now have fourth, we keep making our entries in that manner. Otherwise, this is our first touch, second touch, our entry, and you see how it plays out beautifully. So this pattern is very much simple. All you need to do is you mark, identify your point A, point B, and then you allow price to come to those zones and you make your entry. Just as you can see, this is a typical downtrend, and what you can see here, we have our point A, we have our point B. Okay, you can choose to skip this and even call this point A, point B. Okay, and look at what happened. This is our C, and we could have made this entry based on our candlestick patterns and formation. Okay, so this is how this can be traded. The pattern is simple. To have more idea about candlestick pattern, you can trade around this zone. You can watch our previous video on candlesticks pattern. Alright, so you back test this, try this out, and you'll see how beautiful and how profitable this can be. And I believe you are getting value from this video. Please do not forget to like, to share, and above all, subscribe to the channel. And do not forget to share this video with your friends and loved ones. We look forward to hear from you. Drop your questions and your comments in the comment section of the chat. See you in the subsequent video.